Good morning, everyone. A very warm welcome to the 17th Indirect Tax Colloquium organized by VILGST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified CA, qualified LLM, and LLB. He is the chairperson of the Indirect Tax Core Group of CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCCI. He is the regular speaker of various professional forums on the key areas of direct and indirect taxation. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer all your queries at the end of the session. Now I request Sami sir to say a few words.
Thank you, Mosmi. So, good morning to all the participants. Good morning, Vivek. Welcome to this 17th edition of Indirect Tax Colloquium. Uh, we try to do it every month, and we try to cover all the important aspects of indirect taxes, which has happened over the last 1 month. There's small revision in this. Whatever the agenda we had circulated, there was small amendment to that, or there was revision in terms of adding this Supreme Court judgment of Tata Motors. It was not in the mails that we had circulated. So, since this is a very important judgment, and we thought it's we include that also in this session. So we'll cover all the important aspect of indirect taxes that has happened over the last 1 month. And if you have, like Mosby said, if you have any queries, you can put it up in your chat box and we'll take it up at the end of the session. So thank you for your participation. So over to you, Vivek. Please take it forward.
Thank you, Samir. Uh, and good morning to all the participants. Thank you for joining this colloquium. While many more participants would be joining, however, keeping in with our custom of always trying to start on time, we are starting at exactly 11 o'clock. And I know, this colloquium is on 20th of the month this time. And 20th is the due date of the GSTR 3B filing. However, most of the 3Bs are filed by 19th. And so we thought that since we always try to hold it on Saturday morning so that maximum people can take the advantage of this session. So we thought, why not have it rather than delay it? And as Samir said, that we would try to cover everything which has happened in the indirect taxes space in the last 1 month. However, you all know that taxation nowadays is changing almost every day. Financial, economic decisions are being taken every day. Gone are the days, 5 years, 10 years back, where a tax decision was taken only or more or less during the budget time, and thereafter it was business as usual. Now we see only yesterday, as we were in a conference, we were discussing this new TCS under 206C1G of 20%, and there was an amendment. As we were discussing angel taxation under 56(7)(b) of Income Tax Act, there was an amendment up for public comments. GST, as you know, this drive for fake registrations, this instruction is unprecedented. And as we speak on this, we have two stalwarts of taxation, Shri Arvind Datar and our Additional Solicitor General, they have been writing articles and counter articles on whether Article 142 of the Constitution is in as far as the powers of the Supreme Court are involved is in conflict with the provisions or justice in tax matters. Well, whereas these two stalwarts write articles and put in their point of view, we all lesser mortals and students of taxation gain from these insightful articles of the stalwarts. So friends, as a person who is practicing taxation, as a practitioner, as a person who is into industry in the tax department or in the finance department, our expectations from the industry towards tax and finance professionals have increased manifold. And with expectations, even the restlessness or perseverance level reduces because there is a loss of money involved. So it is important that we cover important aspects which has happened. We will try to cover the important aspect, as Samir said, that we have added actually 3 agenda items, 1, 2, 3, because these were the 3 things which had immediately come after we had finalized the agenda. So, and it was important to be discussed because industry as a whole is impacted. We will try to cover other items also which are may not be in the agenda directly. So I will just flash my screen out here. Yeah. Uh, is my screen visible, Avik?
Yes, Vivek, it is visible.
Yes, sir.
Visible. Yeah, thanks. So, yeah, what are these agenda items? These were in front of you, so we'll not go through again. We'll directly hit the first agenda item for this colloquium. Friends, there are interesting show cause notices. There are interesting orders which we are all receiving under GST. Whereas a taxpayer many a times fights on merits when there is a 1-3B mismatch, 3B 2A 2B mismatch, e-way bill 3B or e-way bill 1 mismatch. We try our best to reconcile them and submit on merits. We always advise clients and industry to always submit on merits and not go into the nitty-gritties of natural justice and fighting on nitty-gritties of law. Always we have advised to reconcile and to submit before the department and to make the department understand in principle that there is no mistake. However, many a times we have seen, especially nowadays, there are interesting cases where sometimes capricious orders are received. Sometimes arbitrary orders are received. In those cases, we have to defend ourselves. Why? Because the moment you get an order under GST, 30% of the disputed tax is by and large stuck up. Why I say 30%? Because 10% is payable on the first stage, appeal, and 20% at the tribunal stage. Tribunal has not been formed and there is no stay. So, till tribunal is formed, and even after tribunal is formed, 30% is payable as a pre-deposit. We all know that tribunal, whenever it will be formed in December this year, January coming year, or maybe October, November, they will start with more than 1 lakh pending cases possibly. So even if after your tribunal is formed, your 30% would be stuck up possibly till the next 4 to 5 years. And if there are multiple cases, you can understand the gamut of pre-deposit which might be stuck up. At the commissioner appeal stage, the first stage, we all know from the history of indirect taxes that the success ratio is quite low. In during service tax regime, we have put it up before the authorities that why not scrap the commissioner appeals totally, because sometimes even orders are passed even without taking into account the submissions made during the hearing stage. So in case these kind of arbitrary, capricious show cause notices or orders are passed, where to take resort to? Friends, section 75 is a code in itself. Most of us would have read, but for those who have not read section 75, please read section 75. We would discuss how to take the benefit of section 75 in these cases. On your screen, you can see a judgment of the Delhi High Court, Madhya Pradesh High Court, which has been reported by VILGST in 2023 VIL 294 MP. The judgment in the case of Durge Metals versus Appellate Authority and Joint Commissioner of State Taxes. Well, in this case, it so seems that the adjudicating authority was in a collection drive. They have just specified some figures in the show cause notice and have not dwelt with those figures in detail. And therefore, the show cause notice or the order is not a speaking order. And in case it is not a speaking order, section 75 subsection 6 comes to your rescue, wherein the show cause notice and or the order has to dwell on not only the facts of the case, but also the reasons why the show cause notice or order is passed adversely against the taxpayer. If the show cause notice or order does not deal with it in detail, then the same can be quashed by the High Court. So, in case an order, again another interesting judgment in the reported by VILGST in 2023 VIL 303 Madras High Court. The Honorable High Court in this matter has held that even if extension of time or adjournment is not given to the taxpayer, then there has to be valid reasons. Of course, more than 3 adjustments can be denied as per the section 75 again. However, if till 3 adjournments, if an adjournment is not granted, then the sufficient reasons and sound reasons should be there. Further, friends, a show cause notice should be adhered to, and an order should be within the 4 walls of a show cause notice, wherein a show cause notice is given for, say, 1 versus 3B mismatch. The show cause does not even ask you to produce relevant documents for a 2A 3B mismatch. Then the order cannot go beyond the show cause notice and ask you for and confirm a demand for a 2A versus 3B mismatch. So order cannot travel beyond the show cause notice as per section 75 subsection 7 of the CGST Act. And as we said, section 75 subsection 4 and 75 subsection 5 provides that an adjournment has to be granted for 3 times, and an adjournment cannot be for 1 day or 3 days. It has to be for a sufficient point of time. If the data which is required to be provided is very voluminous, many a times nowadays the department asks for 1 versus 3B reconciliation. It asks for 1 versus e-way bill, 3B versus e-way bill reconciliation, which is generally not done and which requires a lot of time to be completed. In these cases, right, Mr. Devashish is saying not audible. Is the sound okay?
Yeah, sir, it is okay.
Okay. Mr. Devashish, you can see your bandwidth. Yeah. So next is interest. Friends, again, many a times when analyzing a show cause notice or an order, especially a show cause notice, where we are admitting a tax payment, we feel that interest and penalty we will see. Please note under section 75 subsection 9, there is no court which can grant you an exemption from interest until and unless there is a settlement of dispute scheme, right? So whenever you are analyzing a show cause notice or an order, also take into account the interest impact. Many a times, and there are various, as I said, interesting show cause notices. So all of you who have applied for the special dispensation while filing the TRAN forms in September and October 22 or revising the transitional credit forms, it is seen that while the transitional credit has been accepted, however, in case a transitional credit has been taken earlier, then that transitional credit is considered as irregular and interest is being charged. Interest under GST is quite a hefty amount, and therefore the interest impact has to be taken. There is no court which would grant you a exemption or a relief from interest. Can revenue neutrality be a ground? RCM paid and credit taken, where RCM was not applicable itself. Can the department demand that, okay, you have paid wrong RCM, that you can take a refund? However, the ITC you have taken, that is irregular, and for that you have to pay interest. Revenue neutrality can be a ground in certain cases. Many a cases, for example, RCM not paid and credit not taken, there possibly revenue neutrality might not be a ground. But where RCM has been paid and credit taken, RCM wrongly paid and credit taken, their revenue neutrality can be a ground. So interest under GST is something which you need to look at with a tooth comb, because that has a huge impact. Show cause notice cannot be prejudged. A show cause can be a notice where you are asked to show and demonstrate why a demand should not be raised on you. However, a show cause notice cannot prejudge and order that a demand should be raised on you. It means at that point of time that there is no natural justice, and section 75 subsection 4 or 75 subsection 5 has been violated. So show cause notice should ask you why a demand should not be raised on you and not prejudge the fact and the case. So many a times we see that there are huge number of case laws in the show cause notice. Many a times under 16(2)(c), it is stated that that since the recipient has not paid the taxes, you please pay the taxes. In one of the cases, after issuing of the show cause notice, there was a mail from the department that please pay the tax as per the show cause notice. In all of these cases, there is a prejudgment of the show cause notice, and that show cause notice itself is void and can be challenged. Possibly, maybe not. You may not want to go to High Court, but friends, mind that in the order you have to take these grounds as per section 75, or in the reply to the show cause notices, you have to take these grounds as per section 75 so that you can contest it at the appellate stage or the tribunal stage itself. As I said, a speaking order needs to be passed. An order should have annexures. In some of the cases, we see there are no annexures. It is merely some figures have been stated that yes, there is a 2A 3B mismatch. So in these cases where there is no annexure at all, there is no calculation provided, then the show cause notice becomes null and void itself. Very recently, the Honorable Finance Minister herself has stated in one of her conferences that without document identification number, any show cause or order is null and void and should be thrown in the waste paper bin. So without DIN, all show cause notices and orders are void. Well, a very important aspect which you must take in every reply of a show cause notice under section 74. So what is section 74? It is a case that where there is an allegation of fraud, willful misstatement, and suppression to evade tax. Herein, the time barring period is 5 years from the due date of the annual return. However, in case of section 73, the time barring period is 3 years. So wherever the show cause notice is not issued within 3 years, then they try to invoke section 74 for 5, taking the time barring period as 5 years. Right? In these circumstances, you must always contest on the basis of facts and evidences that why there is no fraud, willful misstatement, or suppression to evade tax. What is a fraud? Fraud has to be accompanied by mens rea. That is a guilty mind. Right? So the department cannot allege a fraud without proving that there is a mens rea or an intentional evasion of tax. For example, you have taken a credit on the basis of GSTR 2A and on the basis of documents where you have made the payment to the suppliers. Just because the ITC is not reflecting in your 2B cannot be a ground for invoking section 74. Or, for example, you have paid the taxes, but possibly The department is alleging, why didn't you take the registration in a particular state? Because as per the department, the supply happened from that particular state where the taxes have been paid, and only a fixed establishment or not fixed establishment, that is under question. Then there cannot be a invocation of section 74. So you must take this ground. Again, willful misstatement. The word willful is very important. It has to be a willful, a purposeful misstatement for with the intention of evading taxes. Suppression. If you see section 75, section 74, the word suppression has been defined, and the definition is very wide. Any non-statement in a return, that would also amount to suppression. But the important word is suppression of facts to evade tax. A mere suppression, allegation of suppression will not do. It has to be accompanied with a suppression of facts with an intention of evading taxes. So just because you have not disclosed a high seas sale in your GSTR 9, wherein it was an exempt sale, it cannot be held to be a suppression of facts with an intention to evade tax, right? Many a times we see an order which is passed, which did not even take into consideration many of the points which you have raised in your reply to the show cause, right? In this case, you can always contest, right? That the order was not a speaking order under section 75 subsection 6. Again, now, as I said, there are various interesting show cause notices or orders. We are seeing there is an order which is not passed under DRC 7. There is a show cause or there is a notice which is not in DRC 1. There is a DRC 1 without a pre-show cause notice under DRC 1A. All of these must be taken as a point of argument in the reply to show cause notice or an appeal. All of these are mandates under Rule 142 read with section 74, 73 and 75. Again, the field formation sometimes throw up very innovative ideas. And one innovative idea is an arbitrage under section 70, between section 73 and section 74. As you know, that if before the show cause notice, you pay the tax along with interest, then there cannot be any notice which has to be issued to you, or there cannot be any penalty which is levied. But in case he invokes section 74, even though you have paid the tax and interest before issuance of the notice itself, even then he can confirm a demand of 15% penalty. Mind that. So there is an arbitrage opportunity between section 73 and section 74. And that is why in all your replies to section 74 notice, it is very important to dispute the invocation of section 74, because there is a consequential penalty of 15%, 50% or 100%, which is attached to section 74, which is not there in section 73. In 73, the maximum penalty is only 10% of the tax amount, whereas section 74, it is 100% of the tax amount. Right. The Friends, many a times during a DGGI or DRI inspection or investigation or summon, the authorized representatives, the advocates, they are kept out of the room. The question is, what is the law? Taxpayers ask us. The law, as per the Honorable Apex Court, is very, very clear that the authorized representative, advocate, CA, CMA, CS, whatever the case might be, may not be under visible, audible distance, but he has to be under visible distance. So it is important to note this case and decision of Bombay High Court on the basis of Apex Court's decision in the case of Amit Kumar Sharma versus DRI, that even during a DRI, DGGI or investigation bureau investigation summon, the AR or advocate or CS, CMA, CS, they can always be within visible distance, may not be under audible distance, because what is required to be seen is whether there is any coercion or an attempt to a coercion during those investigations or summons or proceedings. So again, very important judgment reported by VILGST in 2023 VIL 288, Bombay High Court. Customs, this was a customs matter. So next item on the agenda is warranties. Now this is a long-standing dispute in GST between the field formations and between the taxpayers. And there was a very, very important judgment in the erstwhile VAT or central sales tax regime in the case of Tata Motors very recently. The hearing went on for many days in the month of March 2023, and the judgment has come very recently in May. Many taxpayers are impacted. The automobiles industry, of course, automobile spare parts industry, automobile dealers, automobile accessories, the mobile phones industry, television sets, or all electronic goods, electrical goods industries, the heavy machineries industries. So almost all the white goods industries or capital goods industries, heavy engineering industries, all would be impacted by the decision. All of these taxpayers have a question, a pertinent one, that okay, this was a judgment under VAT or central sales tax. What is the impact of this under GST? Friends, let me tell you, the issue of warranty under GST is being discussed at the very highest authority of the GST Council, and it is being discussed threadbare. Let us understand the nitty-gritties of not only this decision, what is the impact of warranty in the GST, and most important for all of you is what recourse, what actions need to be taken by the industry under GST where there is impact of warranties. So what is this judgment? First, let us understand what is a warranty supply, right? Thereafter, we will come to this judgment. So, friends, there are two kinds of warranties. a warranty replacement or a warranty repair. So what is a warranty replacement? A warranty replacement is where a product itself is replaced during the warranty period. For example, if you purchase a mobile phone which is under 3 years warranty, however, there is a manufacturing defect in the mobile phone which is detected after 1 year itself, and the entire mobile phone is replaced. That is a product replacement warranty. However, in case in the mobile phone, there is a particular fault of a motherboard or any chip, and only that chip is replaced after 1 year. That is a warranty supply of spare part or warranty supply for repair. Now, this earlier one, warranty supply for replacement, that can be divided into two parts. Again, first part is in the example which I gave, that mobile phone is found defective after 1 year and the mobile phone is exchanged. And the mobile phone is provided for free. But in the other case, a consideration is received from the customer for the period where the product is effectively working. In my example, 1 year. So a pro rata cost is taken from the customer. In my example, 1/3 of the mobile phone cost is taken because the earlier mobile phone has worked well for 1 year out of 3 years warranty period. So what is the issue which field officers are raising? They are saying this warranty supply, whether replacement or repair, is a free supply of products where input tax credit has been availed earlier and which is taxable under clause 1 of schedule 1 of CGST Act, read with section 7(1) clause C of the CGST Act. That is supply of a product without consideration. So their contention is that there is a supply without consideration, and on this supply under section 7(1)(c), read with schedule 1 clause 1, the tax has to be charged on the warranty supply. The other contention of the field officers is that because it is a free supply, right, there has to be a reversal of input tax credit. So what are the defenses of the taxpayers? The defense is that the cost of this warranty supply, either original product, replacement or repair, is included in the cost of the original supply, because whenever you are giving a warranty supply, you are building up for warranty, you are creating a provision in your books of accounts. There are two FAQs which provide that a warranty supply for repair, that is included in the cost of the original product, and therefore it is not a new supply, or ITC is fully available and no requirement of reversal is there. Even under the central excise regime, section 4 was very clear that warranty supply is included in the cost of the original supply. Section 4 of the Central Excise is replicated under Section 15 of the CGST Act. So it is a consistent practice followed by industry. However, friends, the procedure followed by industry in the case of warranty, that sometimes is questionable. Now, how can a warranty supply be made? I have taken two examples. Let me come only to the second example, where a warranty spare part is provided. So what is the procedure followed by industry? There are primarily three procedures. First procedure, you are an automobile dealer or you are an automobile original equipment manufacturer, OEM, and you supply the spare parts to your dealer. These spare parts can be sold by the dealer or can be used for warranty replacement. Now a person's automobile is creating a problem. The person comes to the dealer. The dealer finds that yes, the defect is genuine, and he replaces the spare part, say condenser. With what? With the spare part which the OEM had sold to this dealer. Thereafter, the dealer raises a claim of warranty supply on the OEM, and the OEM issues a credit note, a GST credit note to the dealer. Friends, the question here comes that whether this credit note is actually a consideration or not. Number one. Number two, the question comes that what about the service which the dealer has provided for replacing the warranty product? And the most important question is this GST credit note under Section 34 of the CGST Act? So this is one practice. The other practice is, in this case only, the dealer raises a invoice on the OEM for the spare part which was earlier sold to him by the OEM. And the third practice is the dealer raises a claim for warranty on the OEM and OEM supplies a free warranty spare part via the delivery challan. Right? Friends, out of this, the Honorable Apex Court judgment and even in GST, the question is raised only on the first practice. Friends, a credit note under GST cannot be raised other than the three limbs of Section 34. First limb, there has to be a deficiency of goods or service. Here, there is no deficiency of goods or service of the dealer, or a deficiency of goods and services of the OEM to the dealer. It is a deficiency of goods and services, if at all, from the OEM to the manufacturer, to the customer. Second is that the credit note can be issued in case of sales return. Here there is no question of sales return. And third, is where the taxable value and tax charge is more than the taxable value and tax which should have been charged. In this case, there is no such charge which is excess. And therefore, this credit note procedure is something which the Honorable Apex Court in the case of Tata Motors has also held that this credit note, even under erstwhile sales tax or the VAT or central sales tax regime, is a consideration and a price for sale, and would be exigible to sales tax or VAT or central sales tax. Even under GST, it is our view that this credit note procedure may not stand the test of judiciary, and this procedure should be changed. It is our view that the other two procedures where a free warranty supply is made or a sale purchase transaction between a dealer and OEM is done, these are the two procedures which would still be correct, and a warranty supply, if proved to be included in the cost of the original supply, would be sufficiently and adequately covered under GST. Another very important High Court judgment in the case of Gamescraft Technologies Private Limited versus DGGI by the Honorable Delhi High Court. Now, friends, we all know goods and service tax is a tax on either supply of goods or supply of services. So, to tax any activity, it has to be brought within the four walls of being goods or being services. There are three supplies which were neither goods nor services. And by a deeming fiction under section 2 subsection 1 of the CGST Act, these three supplies in the form of lottery, betting and gambling are brought under GST. All other supplies of actionable claim, that is a claim to debt, a claim to debt is not under GST. Only actionable claims for lottery, betting and gambling would be considered to be under GST. Now there are two questions. One is, what is the meaning of lottery, betting and gambling? And second is, would if a particular activity would be coming within the four walls of the three words lottery, betting, gambling, then what would be the value? Now, before 23rd of January 2018, the value of supply of lottery, betting and gambling by a casino, etc., was considered to be only the service charges levied by the casino, etc. However, from 23rd of January 2018, White Notification 2/2018 CGST rate, they considered the entire betting amount to be the value of taxable supply, and GST at 28% they levied on this entire betting amount. For example, in case three punters A, B, C, they bet 100, 300 rupees. What the casino does, it totalizes this 300 rupees, withdraws its service charges of 15% and plus GST on that, and the balance, whatever amount is left in the totalizer, it is given to the winner punter ABC. Wide notification to 2018 central tax rate. They have valued the entire 300 rupees as a value of taxable supply under GST. So, first question is, what is the meaning of lottery betting gambling? Friends, even in a casino, you can always say that even in a casino, it is a game of skill and not a game of chance. So the question is lottery betting and gambling, whether any activity to fall under lottery betting and gambling has to be brought under game of chance and not in game of skill. And every activity, even which is a game of chance, would have an element of skill. So if you are playing in cards in a casino, even that would require some skill. But the question is, what is the predominant element? Whether it is a skill or whether it is a chance, which is a predominant element. If the predominant element is the game of chance, then it would be considered as lottery betting gambling. But if the predominant element is a game of skill, then it would not be considered as lottery betting gambling, not liable under GST. Rummy was held to be a game of skill and not a game of chance predominantly. Friends, now the question is whether they can artificially introduce a new activity in a rule to tax that. So what they did, while Schedule 3 states only actionable claim to the extent of lottery betting gambling would be taxable under GST, while under Rule 31 capital A, they brought in horse racing also, which is a distinct activity from lottery betting gambling, and therefore Rule 31 capital A would be considered to be as ultra virus Schedule 3, entry number 6. So, as I said, two important things: whether an activity is predominantly a game of skill or game of chance, that has to be evaluated. Number two is only lottery betting gambling. A new activity, if they have to add a new activity, then they have to amend the CGST Act, entry 6 of Schedule 3. This is our submission in this case. Next agenda item today, and I'm sure all of you have in some point or the other faced this issue, where I have a cash balance in my electronic cash ledger and I file my GSTR 3B late. Am I liable to pay interest? Right? I remember still around 2 years back when we had our first colloquium, or in one of the seminars of VILGST itself, a participant asked me, and my reply was the same. And my reply is the same even today. And I submit as follows. First of all, as per Honorable Supreme Court's judgment in the case of Pratibha processors, it is very important to note that interest is compensatory in nature. In case you have suffered a loss, then only interest has to be levied. In case there is no loss, there is no question of compensation and corresponding interest. Now, friends, under section 50, subsection 1, interest is liable where there is a failure to pay tax. Right? I am repeating. Interest is liable where there is a failure to pay tax. Now the question is, what is the payment of tax? Is it a deposit of money in the cash ledger, or is it the discharge of liability while filing GSTR 3B? Under section 49, subsection 1, it is held and provided that every deposit of tax made in the cash ledger shall be credited to the account of the central government. That is, the central government shall be considered to have received the money when the cash ledger is credited on the GST portal. So the question is, what is the knocking off while filing GSTR 3B? Under Rule 61, Sub-Rule 2, the knocking off from the cash ledger is a mere discharge of tax liability. So there are two events. One is the payment or the deposit of tax. The other is a mere discharge. In my respectful submission, the activity of filing GSTR 3B and the knockoff of the tax from the cash ledger is a mere discharge, whereas the payment has already happened when your cash ledger is credited, and it is sufficient compliance of section 49, and therefore there is no failure of payment as envisaged in section 50 subsection 1, and therefore no requirement of payment of interest is there. Next agenda item, fake invoices, right? And all of those who are interested in statistics, they all know that there is a null hypothesis which you prove or you test in statistics. So let us test. We are talking about fake invoices. We are talking about fake registrations. The government feels there is a huge flow of fake invoices in the country. So let us test this question or this statement by a null hypothesis. So let us draw a null hypothesis, and the null hypothesis of this question is there is no huge generation of fake invoices in the country, right? So this statement or this null hypothesis, let us test. So there was a circular on fake invoicing. Various questions were answered. The root transaction was discussed in this circular was where there is a supply of invoice without an underlying supply of goods or services. That is a fake invoice, right? You pass on the GST without an underlying supply of goods or services. That is a fake invoice under GST, right? Both the provider of this invoice or the issuer of this invoice and the recipient of this invoice and the consequential ITC shall be liable to penal action. The provider of the invoice shall be liable to penalty under section 122(1). The recipient would be liable to penalty under section 73 or 74. There is no question of 73, so 74, right? Now let us understand various questions. Whether a fake invoicing has happened in transactions earlier to my transaction, right? Say I have purchased a goods or a service from a supplier with a bona fide understanding that whatever invoice he provides me with the goods or service, that is regularly paid by him to the extent of the GST amount to the government by utilizing correct and regular ITC. How do I verify this? I verify this from the fact that the supplier has filed his GSTR 3B. In case the supplier files his GSTR 3B, I take the goods or service, I pay him the money for the invoices, and now from 1st of January 2022, the said ITC reflects on my GSTR 2B. Till such time my ITC is taken in good faith and that is regular and it cannot be denied. Even the refund of that ITC cannot be denied in case the supplier is in existence. That was held in the case of Messrs. Balaji Exim versus Commissioner of CGST by the Delhi High Court, reported by VILGST in 2023 VIL 181 Delhi High Court. Now, where is the confusion in the minds of the field officers? So when you are receiving a credit note for a post-sale discount, many a times the field officers allege that, gentlemen, the recipient of the credit note, the commercial credit note, is actually receiving a consideration for this commercial credit note for a service which is supplied. The field formations are imagining that a service has been supplied by the recipient of the commercial credit note. So not only they are alleging a liability of GST, if that liability is accepted, then the question of a fake supply under section 122(1) that would come under consideration, or a fraudulent intent would come under consideration, right? So this is a confusion in the mind of the field officers also, where a commercial credit note has been received for a post-sale discount. It is not on the taxpayer to prove that it is for a post-sale discount. It is for the field officer to prove that actually there is a service which has been rendered in this case for a GST liability to accrue. Bill to ship to transactions. My supplier is in Madhya Pradesh. I am in Maharashtra. My supplier is in Telangana. The supply comes directly from Telangana to Maharashtra. It is a bill to ship to transaction. I received the bill from Madhya Pradesh, supply from Telangana. However, the supplier in Telangana, he takes a wrong input tax credit, and I liable to penalty, or can a case of fake invoicing under 122(1)(a) be imposed on me? Well, to impose 122(1)(a, it is required to not only prove that I am the beneficiary of that ITC, it is also required to prove that I am the mastermind of the transaction. So friends, again here, it is a case where there is some form of imagination by the field officers, and sometimes this may not be the true case. I have purchased goods or services from a supplier who has filed his GSTR 3B. I take the input tax credit after 6 months. The department cancels the GST registration because there is some irregularity found by the supplier. Can my input tax credit be denied? The answer is no in case the supplier is existent, right? If the supplier is not existent, yes, there can be a question on my integrity too. But ab initio cancellation, supplier in existence, at that point of time, you cannot allege that it is a irregular supply or ITC. An extension to this, the supplier's registration is cancelled in Maharashtra, where I am taking the ITC, but the supplier is still doing business in Haryana. Is there a provision in the GST law that the GST department of Maharashtra cannot go to Haryana to collect the tax? I would say no. There is no such provision. Please go to Haryana and collect the tax. Until you have exhausted all your means of collection, you cannot come to the recipient on the mere allegation of that the recipient of the ITC is the beneficiary as well as the mastermind of the transaction, and the allegation of fake invoicing. Supplier has shown B2B under B2C, my 2A, it is not reflected. That ITC is not reflected. My virtual place of business in a business center, that is not recognized by the GST law. Does that make my registration a fake registration? At least an inquiry has to be made before considering a registration to be fake. The authorized representative is not available at the place of business. Does that make my registration a fake registration? Maybe my authorized representative is at an additional place of business. Maybe he's gone to a customer call. I have only one representative in a state, and he has to do various tasks. Why do I need 5 representative and 1 representative in my place of business always? So without an inquiry, my GST registration cannot be considered to be as a fake registration. Next, I have taken the input tax credit. The input tax credit is appearing in my GSTR 2A in 2017, 18, 18, 19, 19, 20, 20, 21 for that matter. However, the supplier has paid the taxes after the time barring period under section 16(4). Does that make my ITC irregular? The provision of 16(2)(c) is that the supplier should have paid the taxes, and the supplier has paid the taxes. The mere fact that the supplier has paid the taxes after the time barring period of under 16(4), that does not make my input tax credit under question. Sometimes allegation of fake ITC is also there. New issue which we faced very recently, the cause for action, 16(4) cases. Again, the cause for action, that is, say I am supplying to a PSU in the month of March. And the PSU in the month of December, after the time barring period of credit note, then they give me a revised PO. That see, this is a revised PO. Please revise your invoice. I have to issue them a credit note, which is time barred. The PSU will not accept a commercial credit note. They want a GST credit note. The cause for action, that is the raising of the PO, itself arose after 30th of November. Can the GST credit note be considered to be as irregular, liable to be rejected under section 16(4) as time barred? In our respectful submission, it is the cause for action itself has arisen after the time barring period. This credit note cannot be considered to be as time barred, right? To the extent section 16 subsection 4 has to be read down. To this extent, to some extent, there is a requirement of amendment in the GST law itself. So I am in Bihar, my OEM, my supplier is in Maharashtra, my customer is in Gujarat. I don't want to do a bill to ship to transaction, because the moment I do bill to ship to, my customer will know the name of my supplier and my business would be hampered. I send my person to the customer's factory in Maharashtra, to the supplier's factory in Maharashtra, take the delivery and from there supply the goods to Gujarat. As per section 22 subsection 1 of the CGST Act, I have to take a registration in the state of Maharashtra for merely executing this transaction. I have to take a place of business. So friends, this, and if I don't take a place of business, then there is a question of faulty registration, non-compliance, etc., etc. against me. To this extent, section 22 subsection 1 should be, you see, just a second. Yeah. To this extent, section 22 subsection 1 should be amended. Again, another case is L2 suppliers. My supplier has done a default. Why should I be penalized? Let my supplier be penalized, if at all. And the last, the goods have not been, and a new digital analytics. The goods have not been moved through the toll plaza. So the movement has not been tagged by FASTag. My FASTag data is not matching with e-waybill data. And there is a question of fake invoicing in this case. So all of these are allegations. All of these are questions by the field officers, which I would say that these are questions which are defendable. These are allegations which are not having a sound legal base. However, on the contrary, we find that certain taxpayers, being misguided, are taking actions against the GST law, like an input tax credit is accumulating in one state. It is the tax is required to be paid in cash in some other state. So why not make a service bill? To show a turnover, why not make a goods or service bill between my group entities? Friends, these are supply of invoices without supply of goods or services and would be considered as fake invoicing under GST. right? E-invoice or e-way bill, they are handled loosely by the logistics department. In one of the cases, we saw that the moment the goods starts loading, invoice is made, e-invoice is made, part B of e-way bill is also made with a hypothetical lorry number. And in case that order is cancelled, again a reverse e-way bill, a inward e-way bill is made to cancel that e-way bill. Friends, a generation of e-way bill outward, e-way bill inward. The GST law considered that there are two movements, whereas there is no movement. These would come within the realm of fake invoicing under GST, although these are done by mistake, by ignorance. But ignorance of law cannot be a defense. And therefore, not only the tax department, not only the finance department, but all departments of your organization, primarily the purchase department, the logistics department, they have to be acquainted with the GST law. Otherwise, you can get into trouble. Many a times we have taken place of business in a business center in one state, but we do not have authorized representative who will represent me over there. My AR is sitting in Bihar, my AR is sitting in Maharashtra. I have taken my registration in Haryana in a business center. This would be considered as fake registration under GST. So it is important to have an authorized representative in the state who can at least be available on call and physically available whenever required. This AR can be a professional or any other person. An employee of the organization is the best. So friends, there is this null hypothesis that there is no generation of fake invoices under GST. Currently, I would say that there are instances where there are doubts in the mind of the field officers. There are instances where there are allegations which are beyond the GST law, but there are instances where sometimes even genuine taxpayers fall within prey to this fake invoicing or fake registration circle. And therefore, there is some semblance of correctness in the GST department's view, I would say, that there is certain amount of fake invoicing which is there under GST. There are certain amount of fake registrations which are there, but it is also a fact that there are many issues which are raised which are not a issue of fake registration or fake invoicing. They are brought within the circle of this fake invoicing, fake registration due to certain anticipations or imaginations by the field officers. So let us understand in this cleanup drive, if this kind of things happen, what are your rights and obligations? We all know now, coming to this cleanup drive, All India cleanup drive, there is a national coordination committee, and wherein one person, if in one state there is a cause for action, there is a fake registration, and the taxpayer is in some other state, then there would be a interstate coordination within the GST departments, and this guy can be brought to notice. In case a fake registration or evidence of fake invoicing is found, in this GST drive, then cancellation can happen, suspension of registration can happen, blockage of ITC can happen, freezing of bank accounts can happen, and most important, even your customers can be approached and their input tax credit for the supplies made by the person whose registration is suspended or cancelled. So the customer's ITC can also be in question. However, what are your rights and obligations? This inquiry would only be limited to an inquiry. No documents, informations, reconciliations can be asked from you. No search and seizure operations under Section 67 can be done against you. Why this fake registration unearthing drive? If a Section 67 has to be invoked, it only has to be wide a power under INS 1 form. So a summon, if at all, if it is issued to you, if your statement is taken, that has to be under Section 70 and not wide this GST drive. The GST department who is on this drive cannot ask you to make a deposit of tax on that very day. There cannot be any coercion. The fact that the tax has been deposited on the day, if at all, that would be considered to be as a coercive measure and is liable to be quashed by the high courts. There are many cases wherein the high courts have quashed this kind of disproportionate action. So what are your rights? You can always, and you should always, in case there are allegations which you can defend by evidences, information, explanations on the spot, you should raise your objection via a note. Very, very important. Before signing any document, you must be very careful. You must be convinced that the document you are signing, that is your statement and not what has been dictated under coercion. Any coercive measure is not the intention of the law. If a coercive statement is taken, then that is liable to be retracted. If an allegation of coercion is there by a taxpayer, then the statement taken has to be set aside. And lastly, friends, Section 122(1)(a), wherein your supplier is under question, wherein there is an allegation of a chain transaction. In that case, it has to be proved not only that you are the beneficiary of the transaction, but it has to be proved that you are also the mastermind of the transaction, or the alleged person is the mastermind of the transaction. Other than this, 122(1)(a) cannot be invoked. While we state all this, let us be ready for scrutiny. ASMT 10 and automated scrutiny for 19/20/2021 also. While this instruction dated 11th of May 2023, wherein automated scrutiny may be started very soon. How to prepare for that automated scrutiny? Well, you can go through these slides. In fact, you can also automate your system. You can, for in the benefit of time, I'm not going through these slides. This PPT will be shared with you. You can go through this at your own pace. If there is an allegation, now this is a very interesting judgment by the Honorable High Court of Madras. If there is an allegation or if there is a contention that the taxes have not been paid to the government, then a protective collection of duty can be done from the recipient, as has been held in the case of Finstar Automotive India Private Limited. So 16(2)(c) allegation can lead to a protective collection of duty from the recipient. And if subsequent collection is made from the supplier, then that duty which is protectively collected is liable to be refunded. So what is important, friends? A supplier due diligence is important in this era of uncertainty under GST. It is very important to appoint an agency, outside agency if required, and physical verification of the supplier's place of business, I would say, is very, very important and the need of the hour today, along with checking your KYC documents of your supplier. Very interesting case is that of Stanley Engineered Fasting India, wherein even in this drive, a cancellation of GST registration and a recovery of taxes cannot go hand in hand. If the department has to cancel your registration, they cannot do a recovery of taxes. They cannot come to your office and cannot ask you to pay taxes and at the same time cancel your registration. Both cannot be done at the same time, even during invocation of section 67 or 71 or 70 for that matter. Friends, another very important case under customs. We would end with this before we take all the questions. Now, this is a clear example I wanted to discuss, wherein an action by the agencies, a confusion of the field officers. You don't need to litigate every case. Sometimes litigations would not yield the best result. So a litigation, I always say, yields the best result only in case there is a confusion of the field officers. But in case the law is clear, then it is required to make a policy representation. And on your screen, you can see a notification 33/2023 of customs, where a wider policy representation, where a policy advocacy, this amendment was made in the law. So what was the issue? Wide customs notification 50/2017, there was an exemption of customs duty on the import of parts of smartwatches. So when parts of smartwatches are imported, then the duty is subsidized or exempt, vide section 25 of the Customs Act 1962. However, if you go into the rules of interpretation, Rule 2 of the general rules of interpretation, it is in conflict with this notification. Rule 2A of the general rules of interpretations state that in case parts of a product are imported in knockdown, semi-knockdown or other condition, it would be considered to be an import of the product as a whole. So even when the parts of smartwatches are imported, then that would be considered as an import of the smartwatch itself. So the rule was in conflict with this notification, and a policy amendment has been made on 27th of April by this notification 33/2023 customs, wherein for this notification, even in case the purchase of or import of certain components goes in conflict with Rule 2A, yet this notification would prevail. This was an amendment to this notification in the form of a proviso, right? So this dispute, without going and litigating in the courts, it was better because this was a policy issue, and through a policy amendment, this issue could be tackled. Possibly in this kind of classification issue, courts would not have helped because the law it was as it is was conflicting and ambiguous. So friends, this again is a clear case where there are various ways and means of dealing with issues under GST, under income tax, in various customs, various taxation statutes. So as a tax practitioner, as a finance and taxation professional in the industry, you have to see which way you have to deal with cases so that the best results are achieved for your clients or your company. So with this, let me take all the questions which are there in the chat box. Okay, Mr. P. Aravindan of Mrs. Abarna says, sir, whether DRC 1A must be replied. Sometimes department refines DRC 1 based on the reply of 1A. Of course, Mr. Arvindan, we have seen many cases which are dropped at the GSTR DRC 1A stage. They are not taken to the DRC 1 stage, right? Very recently, we had such a case, and therefore it is important to reply to a DRC 1A. Mr. Jigar says, sir, whether interest can be demanded by the department in deposit made in cash ledger but 3B filed late, the department can always demand whatever is ambiguous or whatever it feels. However, as per our submission, section 50 subsection 1 read with section 49 and rule 61 subrule 2 makes it very clear that when there is a balance in your cash ledger, just because your 3B is filed late, interest is not applicable. Mr. Ramesh says CGST audit is issuing 74 after completing audit directly. Yes, Mr. Ramesh. So as I said, you must contest on the basis of facts and evidences, if available, the invocation of 74. Most important is to see whether there is a intentional default and there is a, substantiation of mens rea. It is important. In case there is no mens rea or in case there is no intentional default, then section 74 can be quashed by the appellate authorities going forward. Mr. Rajesh says when payment to suppliers are routed through book entry journal, same is not considered while working payment above 180 days, rule 27, some officers are directing to pay tax. Can officer disallow? Absolutely not. Mr. Rajesh, please refer to West Bengal advanced ruling in the case of Senco Gold way back, I think in 2018. Even a book adjustment would be considered as valid compliance with second proviso to 16 subsection 2. Mr. Amitava Lahiri says, is reflection in 2B mandatory for taking credit of IGST against import? Well, in case, now there can be various cases. I have dwelt with this in various forums. We are dealing with this on a day-to-day basis. Number one, your import is reflecting in your ICE gate, not reflecting in your 3B. In this case, there is no confusion at all. Please take the input tax credit. I don't think the department will also raise a question in this case. Number two, in case this kind of a scenario is happening, there is a button on ICE gate saying, I think, fetch ITC. If you click that button, then the ITC sometimes does get reflected in your GSTR 3B. But the moment it is reflected even in your ICE gate, then you are eligible for ITC, even if it is not available in your 2B because of a technical glitch. In case, even if it is not there in the ICE gate, even then it is our respectful submission that input tax credit cannot be denied just because of a technical glitch. And GSTR 2B, that mechanism is not applicable for imports, and therefore IGST ITC can be taken for imports even when it is not reflected in 2B in case you have the bill of entry. So I think I have replied to this, but again, it is always important to raise a grievance which would form as a evidence in case litigated in future. Mr. Ashok Jha says, sir, the GST return for financial year 18-19 is filed late in 2021 and ITC was claimed on filing. Mr. Jha, what is the question? Oh, now department says ITC will not be allowed as claimed late. We have satisfied all the conditions of IN under 16.2, but ITC claimed late. Now, if you have claimed ITC beyond the time barring under 16.4, then yes, the department is within its right to raise a dispute. And this can be litigated because where substantively you are eligible to take ITC. However, there have to be a valid reason for the delay in GSTR 3B. In case there is a valid reason beyond your control for filing GSTR 3B late, then the courts may allow this ITC. However, you have to make a case out of it. If there is no valid case, then it could be a weak matter, I would say. Mr. Amit Ghosh says, if any organization makes payments of GST differential liabilities after filing 3B, after reconciling between 1 and 3B, the amount lying in cash ledger and the amount adjusted through DRC 3 after 3 months, please let us know interest calculation up to the date of payment or date of filing of DSTR 3, DRC 3. Mr. Amit Ghosh, as I said, it would be the date of payment in the cash ledger and not the mere discharge as per GST in DRC 3. Mr. Ramanujam says Jharkhand High Court in a decision has held his interest is paid even if it is deposited in cash ledger but appropriated on time through delayed filing of GSTR 3B. Is there any support for divergent view? I have already, explained it. Possibly you have joined late, sir. Mr. Ashok Jha sir says we have paid some amount in cash ledger filed late due to financial difficulties. On the full amount, I think Mr. Ashok Jha, I have clarified this question. Mr. Rajesh says ITC claimed after due date of filing GSTR 3B and supplier also filed GSTR 1 after due date. The department has disallowed the same. See, the question is before 31st of December 2021, subject to Rule 36(4), it would be allowed. After 1st January 2022 and the invocation of 16(2) AA, the interest would be applicable, right? Mr. Suresh Gupta says, but it is not related to a topic. Of course, you can ask Mr. Gupta. Okay, you have already asked. Big query. Company A is located in West Bengal, has property in Delhi, has applied for registration in Kolkata. A property is in Delhi, but had not applied for registration in Delhi. GST registration is Kolkata is under process, not allotted. A is renting property to company B. Company B is located in Kolkata, West Bengal. Company B has registration in Kolkata, carried out its business. Company B does not have registration in Delhi. Now please guide. Can company A charge GST on renting of property situated in Delhi? Very good question. You are considered to have a fixed establishment as defined under section 2 of the IGST Act in Delhi. Company A is required to take registration in Delhi and only then charge GST from Delhi as IGST and CGST. Right? Okay. I think I have answered your query, right? There is no option for that. Now, if you are taking registration in 23-24, you want to regularize the earlier action by means of a cross charge. Well, that would certainly fall under a procedural hardship. I would suggest, and you should be ready for litigation. In my legal opinion, I don't think it is a very good case, Mr. Gupta. Mr. Ankit Khandelwal says client has claimed ITC of C and S inadvertently in place of I. The same has been adjusted with the output of C and S. Now department is asking to pay tax with interest. Ankit, there is no liability of interest. Please go through section 77, right? But what has to be done is the earlier C and S has to be taken a refund of and I has to be paid. But there is no question of interest. Please go through section 77. Mr. Chandra Bhan Singh says, what can I do if invoice is generated, e-way bill generated, but order is cancelled? Pass a credit note and provide a submission to the department that the order was cancelled. However, please do not generate a reverse e-way bill. As I explained in one of the taxpayers they are doing, that is a fault under GST. Okay, Mr. Debashish, thank you. Okay, Mr. Suresh Gupta says, can we charge GST on tax invoice without having GST number? As we have recently applied for, you can go through section 31. It allows you to do so and raise a revised invoice after you get the registration. Please go through section 31. Mr. Saurav Sarkar says if import of goods is not shown in 3B, 2B, how to claim ITC while filing 3B? Please claim is under table 4A, I think 4A1. And it will show as a faulty ITC. There would be a red mark populated, but please raise a grievance and that should come as a substantive evidence at the time of litigation, if any. Okay, Mr. Giri says, what is the consequence if high seas agreement date after IGM date in case high seas transaction? Department can impose GST liability even though bill of entry filed by recipient. Mr. Giri, very typical and specific question you have asked. Well, it cannot be a high seas sale, that is true. But it will squarely come under Schedule 3 of a sale during bond, right? Where a bill of entry has been filed by the person to whom the goods have been sold while in the customs area. So even that is a no supply under GST and not liable to GST. There would not be any consequence of GST in case the department questions on this procedural issue. I am sure it would be a very, very valid and good case to take forward. Mr. Monil says GSTR 1 was filed, but GSTR 3B were not filed for 6 months. Preventive officers arrived and client paid the tax along with interest. Now department is asking for penalty under 74. Well, again, as I said, penalty is applicable only under section 73 in this case. There has to be a mens rea approved. In case there is a valid reason for not filing GSTR 3B, like a financial issue, etc., etc., then you can always argue accordingly. Our Mr. Gupta, our company is registered in GST in West Bengal and we have a property in Delhi. I think we have answered this. You cannot charge any GST from your West Bengal registration, Mr. Gupta. If your property is in Delhi, you are registered in West Bengal, you have a fixed establishment in Delhi, you cannot charge any GST from West Bengal. Please take a refund of the GST if at all charged. Take a registration in Delhi and raise an invoice from there for the past periods. At most, you will be liable to interest. However, the counterparty can take an input tax credit in this situation, at least, I would say, and your transaction would be regularized. Mr. Okay, Smruti Chiramji says, sir, this is in GST audit, we have sales against LUT. Is it required to produce endorsement of sales invoice? You have to substantiate it is a sale. Even if there is no endorsement by the customs officer, you have to substantiate that sale has been made. Maybe a confirmation from third party would be sufficient evidence. However, it is a best practice to get an endorsement done. That is the best evidence of a sale under SEZ. Okay, import duty not shown in 2B. We have answered this. Mr. Gopal Goenka says in 1718, the very first month, 3B did not have 2-3 stage confirmation for filing at the beginning. Just click on submit button. Nil return got filed without authentications. Mails were done, no results, so we paid the due GST liabilities. Feb 18, we clubbed together the data of July 18 and Feb 18 in 3B and adjusted the GST liability with the already amount available in the cash balance. So you said even in this case, interest would not be leviable. Yes, Mr. Goenka, interest would not be leviable. In this case, the department can always dispute this case, as one of the participants had said. But in my view, that interest, as per the GST law, interest should not be applicable in this case. And your case is a case of technical issues also, so all the more. Mr. Giri says again, recently judgment has been passed by Supreme Court in the case of Cosmos Films regarding pre-import condition. So in case GST liability, sir, IGST liable to pay, and if IGST is payable for past period, then IGST amount can be availed by us. And also please guide what is their time limit for bill of entry for taking IGST credit under GST. Very good question, Mr. Giri. I think you would have there has been a session here in this matter, but for GST matter, I can say please pay the tax and take the credit. There is no time limit for the last date of taking credit for import under a bill of entry. Mr. Monil, DRC 7A issued by the department, submission is done related to same and further communication is done by the department. Your question is not clear, Mr. Monil. Is GST applicable on overseas bound charges and on air freight charges? Yes, from 1st of October 2022, it is applicable on outbound freight also. So we have answered all the queries in the chat box. Thank you very much for your hearing, and we would have this colloquium again next month. Thank you for joining. Over to Samir and Moshmi for closing comments.
Thank you, Vivek. Thank you so much for uh, giving a patient answer to all the queries that came before you. Thank you all the participants for having with us for this session. And we look forward to having you in the next session as well. So over to you, Moshimi, for closing.
Thank you, Vivek sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinars every month, and we hope we will get you in the upcoming webinars as well. We will shortly share PPT and video link to all the participants. Thank you, Sami sir, for coordinating with us.
Thank you. Thank you.
Thank you.